There is a chance here, with current market conditions, that many investors could get their accounts absolutely deleted. Zero. Gone. I want to talk about that today. This is Mike, the Tactical Stock Scalper. All right, all right. I'm starting to hear talk like, how much lower could the market really go? Oh boy. People have no idea when they say stuff like that. You can tell they haven't been involved in the markets very long at all when they start spewing that kind of crap. That is dangerous, dangerous talk. And let me start here. Look at your account. What would it look like from here, from today, if we dropped another 10% or 20% from this level? What would that look like? Could your account handle that? Could you mentally handle that? I think that's a very important exercise. Now, look, we're at a very serious tipping point in the market. Sure, this correction, we're at a 10% correction on SPX here a little bit ago. We could be at the bottom of this correction, and we could rip up to all-time new highs, get back on the bull, and away we go, and euphoria reigns and all of that. However, because we're at a tipping point in the market, the complete opposite could actually happen. And people are so concerned. They don't ever think about that. The vast majority of people don't think about that. All they think about is how much can they make. They never think about how much can I lose. And you are seeing that all over the place with just this little correction. 10% correction is nothing. That's a light correction. But because we're at a tipping point, we could go either direction. Okay. Is this something you are willing to risk? Another 10, 20, 30% down. I'm just saying. Is that something you are willing to risk because you didn't take preventative measures to stop that from happening? Okay? When the opportunity is sitting right in front of you to do it, but you don't because your concern is about how much you can make and not how much you can lose. I do have my notes here, so I will be looking down from time to time. Now, there's massive opportunity that could happen when the market goes down. I'll talk about that here in a bit. But if we do crash, like we're at a correction, if we do crash, people that are over leveraged, people that are in high risk investments who haven't prepared ahead of time and aren't preparing now, their accounts are going to be gone. Absolutely gone. They're going to have zero. You're going to see that if this indeed happens, if we go through a crash. Okay. Now, what am I doing? Well, I've talked about this ad nauseum, so I'm not going to spend a lot of time on it. I built up cash last year in preparation for a correction because it's been so long since we had one. Okay. But that's not all I'm doing. I'm buying market-related, lower-yielding ETFs. Okay? So by doing that, worst-case scenario, the market drops for a year, 2, 3. Okay? Worst-case scenario. What do we know about the market that is 100% true? The market, in time, always recovers. I'm not saying JEPQ could handle 3 years down because it's never been through it. I'm not saying SPY could, but I like my chances better there than in, say, something like my AMSI or NVIDIA, right? I love my chances much better with those funds. I'm just saying. So that's worst case, right? We go down for a year, 2 or 3, whatever, and what happens, happens. On the flip side, what's the best case? Well, I only got my initial buy-in on those SPY and JEPQ. I'll average down more if the market starts dropping. So I'll just have my initial buy-in on those, right? Worst case, and then the flip side, the market rips from here and, oh well, right? I'll take the little dividends I'm making off that and do whatever. But I would rather be prepared for something really bad to happen than something great to happen. And that mindset isn't happening in the investing community that I'm seeing. People aren't preparing for the worst case scenario. Now, that may never play out, but if you're not prepared for it and you are willing to lose your whole account because you're too worried about upside potential, that's on you. Okay, now let's flip the script. Let's say we go down for a year, 2, 3. Those are massive opportunities, okay? Massive opportunities. And buying incrementally at levels on a weekly or monthly chart with percentages that are small can do really, really well for you in the future. Now, there's lots of ways you can mitigate risk. You could sell everything. You could. I mean, that's, for me, that's not what I'm into. I've made that mistake in the past, and I'm never doing it again, right? But you could. I'm not saying it's right or wrong, but that's one way you can mitigate risk. If you're worried or want to protect yourself from the downside, you could sell off a portion of it. You could start buying into SPY, the Qs, stuff like that. JEPQ. Individual stocks aren't always guaranteed to recover, whereas the market is, right? Guaranteed to recover as far as past history. Markets have been through Great Depressions, world wars, pandemics, assassinations, housing crisis. Yeah, been through it all. And even though those periods may last years, the down periods, what does the actual end look like? The market goes back up. Always. Always. So that's why when this happens, that's one way to mitigate risk, is to buy in to market related funds instead of single stock funds. Because you don't know if the market goes down for a prolonged period what those will look like. Not all recover, my friends. And not everyone thinks, is NVIDIA going to go out of business? Is Tesla? Is Amazon? I don't think so, but you don't know what kind of effect that's going to have on their share price and how long that recovery could take. I'm not here trying to scare anyone or freak anybody out, but we are at a tipping point. And if you aren't prepared for the downside in one way or another, and it does happen, you will definitely feel the wrath of that by not being prepared. Hope this helps somebody out there. This is Mike, Tactical Stock Scalper, out.